Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are back with our resident uranium expert, Justin Huhn from uraniuminsider.com. Justin, thank you for coming back on the show.
It's my pleasure. Good to see you as always.
Yes, you as well, sir. Pleasure's all on this side of the table. Okay, let's start out a little macro. Just go ahead and give us a couple minutes since our last episode. What is your macro view of the uranium market as it stands today?
Well, the uranium market is in just unique territory right now. It's we had a members webinar yesterday with Dustin Garrow from Nuclear Fuel Associates, and he's been in the market for 50 years, in the nuclear industry for 50 years. He's worked for a number of the big names, and currently, essentially, he helps to broker deals with uranium nuclear fuel buyers and producers. Basically, kind of helps those deals get done in the term market. So he knows this market better than almost anyone, and possibly better than anyone. And so what he basically said is that there has never been a period of time in the 50 years he's been in this industry where he's seen these dynamics in the physical uranium market. So there's just barely any supply at all right now. The cupboards have run dry. And that doesn't mean that there isn't a small amount of ongoing production that can and will be sold into the spot market. There is, but the demand is far, far greater than what's being consistently supplied into the spot market. So we have this very, very unique situation right now where supply is extremely constrained. It's going to have trouble responding in time to actually curb the price trajectory that we're currently in, and that we believe will continue to happen. And that's basically where we're at. We have a constrained supply. We have supply that will not respond fast enough, and we have robust demand, and that's underpinned by just fantastic fundamentals for the actual nuclear industry, that it's growing and garnering more support seemingly by the day. So the broad picture is just there's not enough supply, period. And the demand is very, very easy to model out. You can look exactly at what the reactors are going to be consuming this year and next year and the year after that. You can base that demand on a certain tails assumption. You can even be super conservative with that tails assumption for enrichment, and you'll come out with a number that's far greater than supply. And to Mr. Garrow's point yesterday in our webinar, he basically was stating how, with an exception of, I believe it was the 60s and 70s and maybe into the early 80s, we had an enormous amount of overproduction of uranium, more than 1 billion pounds of overproduction. And there was this massive arms race. So multiple countries were building up their nuclear arms, as well as a huge push into peaceful nuclear electricity production around the world, especially in the United States and Japan and France. And at that time, we had a lot of production, but that slowly started to come offline. And we had a severely oversupplied market. You see, there's a price spike that happened during that period of time, came way down. And for decades, and up until just recently, we've had enormous secondary supply that's added as like a liquidity buffer in this market. So that secondary supply for a very long time came from the downblending of nuclear warheads, primarily from Russia. That happened. That was the megatons to megawatts program. That happened from 1993 to 2013, 20 million pounds a year. That's a lot of uranium. Then, of course, we had the advent of gas centrifuge enrichment. It was kind of like the early to mid 2000s. Continuously, that's still the primary method of enrichment globally. Hopefully some laser enrichment will come online in the next handful of years, but these gas centrifuges they have to operate consistently. So it's much more problematic to actually shut down the spinning of these centrifuges than it is to just continue to spin them and spin material down to lower and lower tails. And so when there's not a lot of demand in the market, enrichers can utilize excess capacity to essentially underfeed. I don't want to get into it, but underfeeding was a source of about 25 million pounds of uranium per year, excess coming from enrichers sold as natural uranium UF6 into the spot market. And that has severely dried up. Megatons to megawatts is over in 2013, and we don't have a lot of downblending material that comes in the market on an annual basis, barely at all. And then enrichment underfeeding has been very impacted by this bifurcated market. All of the West's underfeeding is gone. Russia's underfeeding is staying in Russia. So this secondary supply buffer that has helped to ameliorate any supply concerns over the past 40 years is gone. It's gone. And the only option that utilities have besides buying in the market, which they're doing, is to draw their historically low inventories down even further. They're probably going to do that, but it can't stop some of the utilities that do have to buy and cover off their uncovered needs for the next few years in an environment where the primary producers are basically sold out for the next 3 or 4 years. It's going to get very, very interesting, Steve, in the next 2 to 3 years. And we're expecting much, much higher prices, probably far higher than the average conservative estimate is expecting.
Okay, so what you're saying is you talk to a guy who has 50 years in the business here, longer than you and I have been alive, and he's saying this is the first time he's seen supply constraints like this in his 50 years of experience. And that's supply constraints across the whole board. That's across pulling it out of the ground, that's conversion, enrichment. We don't have a scenario now where Japan has shut down their nuclear fleet. They're actually building it back up, so they're not selling anymore into the market. We don't have nuclear warheads that we're able to pull it from. China's sitting on a big supply of it, but they're not going to sell because they're building out a nuclear fleet. So this is a very unique time in history, and one that can be extremely profitable if we position ourselves right.
Yeah, I think so. I think honestly, we're getting into the next leg of this market. We think that's going to happen in 2024. We had a good resumption of the trend, let's call it, from August until now. The stocks are up 30-40% during that time period. And most of these charts, if you zoom out on weekly or even monthly charts, just have these gigantic cup and handles, and we're kind of right at the end of that handle for a lot of the charts in the sector. We think this is going to break out to the upside. Of course, nobody has a crystal ball, but we have very, very high confidence in the continuation of the price trend for the commodity, and the equities should follow that, generally speaking, as they typically do. But yeah, you summarized it very, very well, Steve. You can look at a simple, just structural snapshot of supply versus demand and see that supply is insufficient. But then you can add all kinds of nuance like security of supply, national energy security, the build out program of the Chinese, the Japanese flipping. The Japanese sold 30 to 40 million pounds into the market in the 20 teens, and now they're buyers. There's multiple Japanese utilities in the market, in the term market right now, trying to secure uranium. So this inventory overhang that existed for a pretty long period of time, especially let's call it, 2012 through about 2020, was an overhang of inventory. And, looking back on it, it's hard to imagine how it could have been any other way, because the only way that this situation could have been avoided is if for some magical reason we had some destruction of demand and had inventories come back into the market from those that hold it, which, the Chinese hold the most right now, but there's inventory across the world in various forms. Or we had supply respond sooner, prior to the price response. And that's a difficult thing to ask. So in some ways, you could say that what's happening right now was always inevitable. And I think that that's pretty much true. You can go back and look at 2018, 2019 with the Mike Alkins of the world just absolutely pounding the table and having conversations with dozens and dozens of fuel buyers and saying, look, guys, you're welcome to look at our modeling. And we're in this to make money on this investment. So we have every personal incentive to be as right as we possibly can with our forecasting. You're welcome to take a look at it. Here's what we think is going to happen. There's this much mobile inventory. The Chinese are doing this. The mines are idled and they need these prices. And here we are at 25 bucks a pound, and you're sitting on your hands rather than incentivizing the production that needs to come online to avoid the situation that's going to happen mid-decade. Well, here we are, almost mid-decade, and here's the situation. So they and other investors that did the work at the time absolutely saw the writing on the wall, and here we are. And of course, and you go back and put yourself into fuel buyer's shoes, it's like, it's not really their fault, They've got to answer to upper management. Uranium is 25 bucks a pound. They can buy it hand over fist from the Kazakhs and the carry traders. Why are they going to call up Cameco and voluntarily pay 45? They're not. They're not going to do it. And they didn't do it. And this is the result. No supply, robust demand, $88 a pound, and it's going to double. I think the price is going to double in the next 18 months. I really do. And it could far overshoot that. So yeah, there's nothing stopping this, in my personal opinion. Nothing's a guarantee in the investment world, of course. I'm sure you know that just as well as I do. But this is as close to a sure thing as I've ever seen. It should be pretty exciting.
Yeah, we're definitely looking forward to it. I'm going to share my screen here, and just for fun, and we can see here's the uranium futures just screaming. This is reporting UXC is reporting 89.20 right now. I think John Quakes was saying that there's some sellers asking up to 90. One of our questions is from PH. He says, why are the equities lagging so much? So here's what he's talking about. We'll put uranium versus SRUUF. So this is URNM versus SRUUF, essentially SPUT. And we can see that, you know, as this goes down, it means that the commodities outperforming the equities. If we put this here, we'll do URA versus uranium futures. And we're kind of in an interesting little point right here. I mean, this is what I've been taught is a double bottom. Do you see the same thing, Justin? I mean, I got to believe that pretty soon we're going to start angling up here. Maybe I'm wrong. What are your thoughts on that? Why the equities are lagging?
I am very, very bullish equities here. I love this chart right here. This is sitting at historical support. You could draw a very gentle kind of arc underneath that. If you really zoom in, you can draw somewhat of an inverse head and shoulders. Either way you look at it, equities are cheap compared to the metal. And if you just look at historical precedent, when risk is on in this sector, the equities vastly outperform the commodity itself. So and I always say when I chart this and I show this to our membership, I always say this could stay flat and move horizontal and make no movement whatsoever to the upside. And we're going to be really, really happy with our investments because the commodity is going to continue to go higher. So I would say to the question, why are equities lagging? I think it has everything to do with sentiment. That's the only real justification I have for it is sentiment has been poor. Now, for the past 12 months, honestly, and not just for uranium equities, but equities in general. Yes, the broad market is up on stilts, driven by basically the short squeeze of 7 major tech stocks. You can't really compare any other sector to that and say, see, the S&P is up. Why are we not up as much? It's just a major short squeeze in these liquid stocks, and that's probably going to reverse anyways. But this story continues to get out there. It still is somewhat of an echo chamber, but more and more utilities, institutions are positioning in this sector. And I think that there's plenty of evidence for that. You can see the performance of the large caps, the ETFs, and SPUT relative to the small and mid caps, and they have outperformed. And that always happens in the early stages of a commodities market, the large liquid stocks. That's the smart money positioning. And that's been happening. We've seen flows continue to come into the ETFs month over month over month over month. Share count increasing. They've been buying their underlying holdings, and it's been matched off with a decent amount of selling, primarily coming from retail that sits with low sentiment. So there's a very substantial portion of retail investors who have not traded this very well or just have not held through the volatility that have had the rug pulled so many times. My business partner and friend Rick, yesterday in our webinar, again, I'm highlighting the webinar a couple times today, so I don't know, that's just coming up top of mind. He made the analogy of the Peanuts cartoon where I think it's Linus or no, Charlie Brown goes to kick the football and Lucy pulls the football away at the last minute. And every single time she's like, don't worry, I'm going to hold it this time. And he does it again. And he just continues to miss and fall. And there's been so many fits and starts that I think that retail investors in this sector are just kind of jumpy and ye of little faith. So it's going to take a real robust run to get a lot of FOMO sentiment coming into the sector. On the retail side, the institutions are clearly bullish and clearly positioning. I can see that very, very clearly. But yeah, I don't know. I think it's just sentiment. Everybody's waiting for the next Black Monday. Everybody thinks that the recession is going to destroy the markets. And you know what? Maybe it will. I don't know. I don't have a crystal ball. But that's the only thing I can explain it with is sentiment has been poor for the equities. For nuclear and the commodity, of course, it's quite bullish, and everybody can see that. But the equities, there's still a lot of non-believers, and I think that'll change.
Yeah, we asked Rick the same thing, and he basically said that in these cycles, generally speaking, the commodity itself moves first, then the majors move like Cameco and Kazatomprom because institutions can put money into that. And then after that, it's the what's he call them, the penny dreadfuls. He said
Yeah.
those
Oh, yeah.
move
Rick
and they
Bull.
move
Yeah, of
even
course.
further.
Yeah. Yeah. He's right. He's absolutely right.
Yeah, yeah. Okay. All right. From Dan, thank you for all the info, Justin. If you owned Cameco, would you start selling and start moving into some of the JVs or ETFs as they might start moving more than Cameco?
I don't know if I would necessarily say what I would do. Um, I'll just say that I do think the next leg of the market is going to see an outperformance by small and mid caps relative to the large caps. So I'll just leave that there.
Okay. Yeah, we literally yesterday sold some physical uranium and put it into URNJ, hoping for exactly
That
that.
probably was a decent move. I mean, it's entirely possible that this commodity just soars and the equities have trouble keeping up. That's happened in other commodities before. It happened a couple of years ago with nickel, for example. It's possible that happens, but I think you're going to get some torque with URNJ compared to the commodity. I really do.
Okay. All right. We're literally betting on it. Okay. Let's talk about Russia. Sid wants to know, and several other people, what's going on with this ban of Russian uranium conversion and enrichment, and what do you see happening there?
This is very curious. So this ban came up. Of course, there's been talks about these sort of things, and there's been various legislation that's been promoted over the past year and a half around this. And honestly, it's been going back even further than that, based on security of supply concerns following the what did Trump call it? The working group, the nuclear fuels working group that followed the Section 232 petition. So this goes back 5 years, where we started to hear more vocal calls for alarm, let's say, by certain members of the industry that this is an unsustainable situation that the country is in, with 20% of the grid utterly reliant on foreign fuel. A lot of that coming from Russia or its allies. So this latest bill, the HR 1042, which is the Preventing Russian Uranium Imports or something like that Act. So this passed the House. It went on to be fast-tracked for the Senate. In order to be fast-tracked and not just go to a traditional Senate vote, it has to have 100% of the 100 senators on board. We had one holdout with Senator Cruz from Texas, supposedly for reasons unrelated to the bill itself. But that's just a holdout on the fast tracking. This is still going to go to a Senate vote. We just don't really know the time frame on it. That's probably not going to happen in the next week, considering Christmas and the New Year's. But most likely it'll happen in January. There were concerns about some of the Senate majority leaders that they wanted to see the defense budget passed with funding for nuclear and domestic nuclear fuel chain support, and that is there. As well as some support for utilities that could potentially be impacted by this ban. That was passed. That funding is there. So it's highly, highly likely this gets approved by the Senate and gets the president's signature. The main reason for my confidence in it has to do with the actual support of the industry. And this isn't universal, but the big utilities domestically are pretty well covered when it comes to non-Russian supply, and are supporting of this bill. And those utilities are supporting of this bill, and some very large advocacy organizations in the United States for nuclear are also in support of the bill. So that means that the senators know that the utilities are all right with it, and they want to make some political statement to avoid Russian material. So it's probably going to pass. Now, the big question is whether or not Russia will, quote unquote, retaliate to this passing and actually voluntarily cut off exports. The bill will have waivers in it for utilities that can't find material from multiple non-Russian sources. The U.S. The Secretary of Energy can issue a waiver to still receive that material out to December 31, 2027. And those waivers will probably be granted, but nobody knows whether or not Russia will act in response and cut off those exports. That's possible. All of this wrapping up is to say the market is responding to this. As soon as an email went out from this advocacy organization a week ago, we saw the market immediately respond. This is late in the afternoon, and bids started to rise across the fuel cycle, but especially for uranium. Interesting. So there is a market response. There is some concern. What it really means in terms of actually receiving deliveries is hard to say at this point. It doesn't seem like it will necessarily have a meaningful impact, but it's yet one more thing that interrupts that quote unquote security of supply that is paramount for nuclear utilities. So it again is just one extra element that highlights the importance of supply security for nuclear operators.
Okay, so it passed the House. It's onto the Senate. Got held up by one guy because he probably wants to throw in something there for his
Exactly.
voters.
Exactly.
Then it'll move on to Sleepy Joe. You fully expect this thing to get passed, but it's got kind of a 4-year timestamp on it for them to figure stuff out in the meantime. And most of the big companies like Duke or Constellation are they're covered. So this really shouldn't be affecting them much.
It shouldn't. It shouldn't. But it is a meaningful statement. And the industry, like I said, the market has already reacted to it. And I'm not saying that the price rise for uranium we've seen in the last week, which has been about a $5 jump, is only because of this ban, but that does have something to do with it.
Okay. Now, what about the argument that these molecules are fungible? Is there some type of tracking on uranium that would prevent the actual Russian enriched uranium from entering the U.S., or is there a way
Yes.
around that?
Yeah, no, there's chain of custody across the fuel cycle from the origin of the material. Yeah.
Okay. Okay. What would it take to essentially not abide by that? Would that take like you know what I'm saying? Like, let's say
Like,
we really
is
do
there a
get
way
in a
that they
tight
can get
spot, like
around the
20%.
ban?
What's that?
Are you essentially asking, is there a way that U.S. utilities can get around the ban
Yeah.
and actually receive Russian material, but kind of fool the regulators?
Yeah, yeah. They sell it
It
to
won't happen.
Belarus, and then we buy it from Belarus or something.
No, it doesn't work that way. There's chain of custody, origin. This stuff is extremely highly regulated as it's shipped. It won't happen. Yeah.
Okay.
And technically it won't need to happen. I mean, if these waivers are in place, they're going to be able to access material if they can't find it elsewhere, and they have to prove that they have made an attempt to find it elsewhere. So, but if Russia does cut off in response and actually they cannot get that material, that's going to be a problem for a few utilities for a few years. And we're going to see a price spike in response to that happening. So I hope it doesn't happen, to be honest with you. I don't want to see this go into some crazy price spike that lasts for a moment in time. I think we have all of the key elements in store here for robust long-term bull market. And I think that's going to happen. But if Russia does cut off those shipments, we're going to see spot SWU and spot EUP just go through the roof. And we're going to see uranium do the same. The price of enrichment and the enrichment capacity has a direct correlation to the price of uranium. So if you actually see the price of SWU rising, you'll see price of uranium rise also. And usually there's a small lag. That's exactly what we're seeing right now. SWU doubled, more than doubled last year. Now uranium is on its way to do the same. And the other thing, this is really interesting. So this is also, gosh, you guys really have to subscribe and be part of these webinars. It is just full of pure gold. There's my shameless pitch, but Dustin Garrow in yesterday's talk was highlighting the fact that, you know, he speaks with utilities all the time, and there's a representative from the largest utility in the United States that has always said, this is how we operate. We buy enrichment, and then we buy conversion, and then we buy uranium. And they've been saying this for 30 years, right? Well, the last time he spoke with them, they basically said, this has all changed. Our focus now is on uranium. And the reason for that is that the industry is now slowly realizing that the uranium itself is the real shortage. The services are consistent in their capacity and able to grow. So enrichment is already set to grow. Urenco is planning to add 750,000 SWU at 2 locations within the next few years. It's going to take some money. It's going to take some time, but it'll grow. Silex, hopefully, Global Laser Enrichment will have some production of UF6 from re-enriching tails in 2028. But either way, they can at least see where this supply response can come from in the enrichment world. As well as conversion. I think that Orano is expanding some conversion capacity. Combinine they have yet to announce this, but they can expand, and the industry can see very clearly now that there's not going to be enough supply response in uranium, and it's now turning into the focus for utilities that they have already secured that conversion and enrichment, which a lot of them have, hence the price response we've seen over the past 12 months, and now need to buy that uranium. There are a lot of utilities in that camp, but also there's a lot of utilities that are covered across the fuel cycle to 2030 that are saying, shoot, we have a problem in the 2030s. We need to buy uranium and secure that now. And that is happening. We're seeing uranium contracts go out into the late 2030s, enrichment contracts go out now, some of them into the 2040s. Uranium supply is now becoming the big story across the nuclear industry, across the fuel cycle. Last year, the panic was around conversion and to some extent enrichment. That all of the utilities that did secure last year in those services and this year are now buying their uranium, and they're coming to the table with an empty plate in front of them. So there's going to be some bidding wars happening in the next couple of years, and possibly even in the next 6 months.
Okay, well, that's great news if you have uranium. So basically, if Russia actually does this, we're probably going to see uranium double overnight, and you're seeing more and more contracts going further and further out into the future to secure uranium. Some of them even into the 2040s.
Right. Yeah. Some of the enrichment contracts are going out a little bit further at this point, and primarily that has to do with that being historically the first element of the fuel cycle that you're going to secure as a utility. But it's more and more clear now that there is expected expansion in enrichment, but there is still a shortfall for the next number of years in uranium. And honestly, you can go out as far as you want into the future with every single potential mine coming online by, let's say, 2032, 33, whatever it might be, and you're still in a supply deficit if the growth that is being promoted and proposed actually does come to fruition. I mean, if we're talking about certain countries kicking into gear and working towards that tripling of nuclear capacity by 2050, well, something's going to be happening between now and 2032. And if we get anywhere close to those demand numbers, all of the supply can come online, and we still have some shortfalls going out, 8 or 10 years. So it's a problem, and there's growing recognition in the industry that it's a problem.
Okay. All right, let's move on to what happened with the Kazatomprom listing in URNJ. It looks like they bought a 10.8% allocation to Kazatomprom in a junior mining ETF, and then realized that there was an error somewhere, and it looks like they're going to pull it. Do you know about that?
Yeah, I mean, honestly, it's been a pretty embarrassing week for that team. Yeah, they accidentally bought Kazatomprom, and then had to sell it the next day and take a loss on it. Pretty ugly. Off the top of my head, I don't remember exactly what it was. It met the criteria for liquidity, but it obviously didn't meet the criteria. It's too large in terms of overall market capitalization to be held in the junior mining ETF. So that was the mistake they made. Had to dump it the next day. And of course, when they bought it in like the last 5 minutes of the market, $10 million position in the last 5 minutes. So it launched it up like 13% on huge volume. Just ridiculous. I don't know why they do this. I don't know why they do this. They care. Okay, when the ETFs buy and sell, they care about one thing: tracking error. They basically, they're not there to try and arbitrage and to try to buy as low as possible and sell as high as possible. They basically just buy when they have to buy and sell when they have to sell. And oftentimes that has outsized influence on the market. And I'm sure if this was not a follow-on question, it's related. The ETFs are doing a decent amount of selling the last few weeks of the year. I think URNM is done. That was yesterday. They had to sell 58 million to pay a dividend, or basically a capital gains distribution, but they're calling it a dividend. And of course, they announced they were going ex-dividend the day before they went ex-dividend. It's like, oh, surprise! Here comes a dividend. So there's a lot of people around the industry that were pretty pissed at the way they operated. Not only that URNJ purchase, but this whole dividend situation. So yesterday was ugly. URA has a lot of selling to do as well. They've got a very chunky dividend that they have to pay out on January 8th or 9th, and they go ex-dividend December 28th. So we're going to see some selling late December, actually probably more like the first week of January. They've got 100 million to sell of uranium names. Hopefully they spread it out and don't wait for the last 3 minutes on January 8th or whatever, the day before they have to pay out. I don't think they will, but it could be matched off with some flows. The dividend payouts, probably half or more of those payouts are probably going to be reinvested. So yeah, I mean, the dividend paying out and the selling that needs to fund that is always a mess, but it's a mess to be devoutly wished for. These ETFs had huge years, and you want these ETFs to have huge years because then all the equities that they hold have huge years and everybody's happy. But yeah, it's a little bit of a mess, a little bit of a Christmas surprise.
Yeah, I've been enjoying this rebalancing right now because there's moments where some of these equities go down, 8 or 10% in a day and hit perfectly on a moving average, and I'm like, wow, that's a purchase.
Oh yeah.
Like
No,
that.
you and me both. You and me both. We have some cash to deploy, so I'm welcoming the selling 100%.
Yeah, maybe we'll get lucky and get a liquidity crisis and get
Oh,
stuff
stop
really cheap.
teasing, Steve.
Okay, this one's from Jordan. Why is YellowCake performing so poorly compared to SPUT?
That's a tough one. It always has seemingly had a little bit of a more persistent and larger discount to NAV. I can't really explain it. I think that may have widened on a relative basis since the inception of the ATM for SPUT. I think it's become a little bit maybe like a sexier vehicle. It possibly had, I'm pretty sure it has less liquidity than SPUT. So for large institutions that can access various international markets, that might be their vehicle of choice just because of liquidity. So, I mean, those couple of things are probably it. I'm not worried really about YellowCake. I mean, it can stay at a persistent discount and just continue to follow the commodity as it has and be a major winner. Betting on it going from a 10, 11, 12, 13% discount back to NAV is a tougher bet, but it's going to track the commodity either way. So, yeah, hard to really say exactly, but maybe those factors are playing into it a little bit.
Okay. And what, since so much enrichment and conversion comes from outside the US, what do we have any enrichment or conversion here in the US that, if we're actually sanctioning Russia on this, assuming it goes through and everything, what's the plan 4 years from now? Are there companies that will be able to take this over in that kind of volume or?
We have both conversion. We have a decent amount of conversion with Converdine, and they just restarted their operations this year with a decent amount of capacity. I think it's, gosh, 7,000 tons or something like that off the top of my head. And they can ramp up to 12 or even more with a decent amount of capex. The problem with Converdine is that it was extremely painful for them to shut down their operations when they did. And a lot of the reason why they had to do that had to do with the capacity of conversion being greater than what the market needed. And so they are very cautious about killing their own business by expanding conversion capacity. So they're going to have to lock in a lot of long-term conversion contracts at prices that are higher than the already very high prices we're at now. And the other problem with it is that Honeywell is the owner of that plant. And this business just is a drop in the bucket for Honeywell. So they don't really care about this business pretty much at all. In fact, I've heard that it was kind of like pulling teeth, convincing them to restart it, despite the incredible fundamentals and the huge bottleneck in conversion that still exists. But long story short, we have domestic conversion. We have domestic fuel fabrication. We have a very, very small amount of domestic enrichment through Centris, which has a relatively small capacity. It has its centrifuges, I believe, are owned by the federal government, and they have historically largely been reliant on Russian supply of uranium for their processes. Centris now is making HALEU, which is great. Urenco has a facility in New Mexico, but it's not owned. It's not an American company. It's a UK company, but they do have a facility here. So there's a decent amount of conversion and enrichment capacity in the West amongst our NATO or OECD allies. But domestic enrichment still needs to be expanded for us to say that we can produce sufficient enrichment domestically, and that's going to take some time and a lot of money.
Okay. All right. Hopefully not longer than 4 years.
Uh, I don't really hold my breath with these sort of things, but yeah, it's going to take some time. I mean, there isn't really new domestic enrichment being built out, a little bit at Centrus, but insufficient to supply the entire domestic nuclear fleet. That has yet to happen. And I don't know. I think the main way that the feds are going to fund this is just through RFPs for LEU and for HALEU. And they're going to let people respond to it. And one of the responses is going to come from Global Laser Enrichment, which is setting up a pilot plant. It's going to be operational next year with commercial operation, re-enriching tails material at Paducah, Kentucky, starting, I think, in 2028. So even that laser enrichment is going to be a few years away, but I don't know where else we're going to have expanded capacity for enrichment here. But we do, like I said, there's a decent amount of capacity amongst our allies, at least for the near term.
Okay. Okay. And you got a heart out, so I want to respect that. Is there anything we haven't asked that's been on your mind in the news lately that that you'd like to share before we sign off?
I'm trying to think of, there was something that came to my mind again from yesterday's webinar. Gosh, no, you know what? I think we covered it pretty decently in a pretty short amount of time there. I would just say to continue to watch the price of uranium. I know that everybody that watches this video right now already does that, but continue to watch that because I don't think that's really going to slow down. I think that we're probably going to break $100 a pound in Q1. In fact, it might even happen next month. I think that really the trajectory is going to be consistent here. And if you go back to the previous bull market, I mean, we're always looking for historical analogs to try to figure out like where we're going in the future. And there's no precedent for what's happening right now and what is about to happen. But if you do go back to when the trend was clear for the uranium price, you can see that we had pauses in the rise of price for a few days, maybe a week, maybe two, but we didn't really see a dropping in the uranium price. Because I mean, if you look at a chart for SPUT or for the commodity itself, it looks pretty stretched. And it's like, okay, when is this thing going to pull back to previous resistance? Nobody trades this on technicals. There is not a single person buying or selling uranium, physical uranium, that's looking at the chart of uranium. Zero people are doing this. So it's absolutely futile to chart this and say, the RSI is a little overbought for U308. It's got to pull back down and reset down to 70. And we're going to see that previous resistance point become support. Utter BS.
Yeah, none of this matters right down here. The MACD
100%.
RSI is just in the clouds, but it doesn't matter because it's a commodity. Nobody's
100%. And we're going to see the commodity continue to rise and the RSI is going to fall. And then everybody's going to be screaming negative divergence. And the fuel buyers are not going to give a damn.
Yeah.
It doesn't really matter. So this is something, the equities are going to do what equities do. Uranium stocks are still stocks. So they still succumb to sentiment, swings in sentiment. And we've seen plenty of those in this trade and we will see more. But the commodity itself is going to keep moving. And that's really the big bet. And of course, we bet on the equities to have some torque to that. And they have torque to the downside as well. So hopefully that torque is going to revert, like we saw that triple bottom chart of URA compared to the commodity. We think that gets a strong reversion this year, 2024. So pretty pumped for that. I would say you just have to keep your eye on the physical market. You have to keep your eye on the physical market. You have to look for evidence of liquidity coming in. And thus far, and this is what we look at constantly. Thus far, we've seen it going in that opposite direction. Price keeps rising and liquidity is declining as the price is rising, not improving. Entities that were sellers have become buyers. The Chinese turned to buyers this year. than the Chinese were selling material from Namibia over the past few years in the spot market, not heavily, but they were there, kind of establishing themselves as players in the fuel cycle, in which they are. They're not doing that. That's not happening any longer. So the people sitting on the largest inventories are the most aggressive buyers here. Okay. Again, from our webinar, the Chinese were visiting Australia last week. They've been kicking tires in Namibia. They've been kicking tires in Niger. 2 different Chinese utilities have signed enormous contracts with Kazatomprom. Just today, an article from a Kazakhstani newspaper highlighted that the exports of uranium by Kazatomprom to China, or from Kazakhstan on a 100% basis to China, for 2023 have more than doubled from 2022. So more of this uranium from that area of the world is going to China, and they are going to consume as much as they can. So everybody's looking to China. Hey guys, you're sitting on 500-600 million pounds of uranium. When are you going to take one for the team and sell it to us? Because we need it. They're going to say, yeah, we're thinking about 2050 and we need more uranium. We don't have it in the ground. So good luck. That's basically what's happening right now. And inventory is just being held so tightly. So, but you have to watch this stuff. You have to watch it like a hawk, because at some point, some price is going to trigger some liquidity to come into the market, and you're going to want to know when that happens. That's what we're focused on. And right now, and for the foreseeable future, we don't see where that's going to come from.
Awesome. Well, right when I think I understand this market, I have you on the show and I realize that you've forgotten more about it than I ever will. So if you want to play the beta by SPUT, if you want to play the alpha, join Justin's newsletter. There will be a link down in the show notes. It's an affiliate link. He's been nice enough to kick a little bit back to the show. Doesn't cost you an extra dime, and you support your favorite podcast in the process. Justin, thank you very much again. You have yourself a great rest of the day, sir.
My pleasure. Same to you, Steve.
Yes, and thank you for tuning in. Support the show, hit the like and subscribe, and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. We will talk to you next time, and have a great rest of the day.